Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Alliant Energy, and let me tell you, it's not just about keeping the lights on, it's about how they're planning to power up their finances. because sometimes the most shocking thing is in the fine print. This report spills the beans on how Alliant Energy plans to raise a whopping $1.3 billion. We will check out how they plan to do this and what they will do with the money. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come chat with us. So, on May 9, 2025, Alliant Energy made a deal. It's called a distribution agreement, and it's basically how they're going to sell a bunch of new shares of their stock. Think of it like this. They're not selling candy, they're selling tiny pieces of ownership in their company to get a whole lot of cash. They're working with a bunch of big name investment firms acting as agents to make this happen. The big number here is $1.3 billion. That's the total value of the shares they might sell. They can sell these shares through normal market transactions, meaning anyone can buy them, or in bigger chunks to specific buyers. This gives them flexibility in how they raise the money. Here's where it gets a little complex, but bear with me. Besides just selling shares directly, Alliant can also enter into what are called forward confirmations. It's like a pre-arranged deal to sell shares in the future at a set price. To make this work, these investment firms called forward purchasers will borrow shares and sell them now. This is like betting that the stock price won't change much. The company doesn't get any money initially from this action. They will only get paid when the forward purchasers decide to settle or finalize the deal in the future. So what's Alliant Energy going to do with all this money? They say it's for general corporate purposes. That's business speak for a bunch of different things. They might pay off debts, invest in new projects, or just keep it as working capital, like the money you have in your bank account to pay your bills. Specifically, the report mentions using the funds to repay debt, which is a fancy way of saying paying off loans. They could also use it to refinance, which means taking out new loans at potentially better terms. Plus, they might buy back their own stock or deal with outstanding bonds. All these options provide more flexibility for the company. These shares are being issued under a registration statement that Alliant Energy already filed. Think of this registration as a permission slip they got from the SEC, the government agency that regulates the stock market. It allows them to offer these shares to the public. If you want to dive deeper into this, you can find all the official documents on the SEC's website. It's like going to the library for financial documents. It's worth noting that the investment firms involved in this deal aren't doing it for free. They're getting paid fees for their services, which is pretty standard. Also, these firms have other business ties with Alliant Energy, like being lenders in their credit line. This is not uncommon, but it's always good to know about these relationships. Now let's dive into the exhibit section. This is where you find all the juicy details, including the actual distribution agreement and the legal opinions about the stock offering. Think of it like the appendices in a textbook where all the supporting documents are located. Exhibit 1.1 contains the distribution agreement dated May 9. This is the actual contract between Alliant Energy and the agents who will be selling the stock. If you want to see the precise legal language of how this deal works, this is where you'd find it. Exhibit 5.1 provides the legal opinion of Perkins Coie LL about the legality of the shares being registered. It's a formal statement from lawyers saying that, as far as they can tell, everything about this stock offering is above board. Now, looking at this situation more broadly, Alliant Energy is making a big move to raise capital. Selling over $1 billion worth of stock can have a big impact on the company. It gives them a lot of financial flexibility to invest in their business, pay down debt, or make acquisitions. However, it also means that existing shareholders will own a smaller piece of the pie because there are more shares floating around. One thing to keep an eye on is how effectively Alliant Energy uses this new capital. If they make smart investments that boost their earnings, then the stock sale will be a long-term win for shareholders. But if they waste the money or make poor decisions, it could hurt the stock price. Another potential risk is that the stock market could decline, making it harder for Alliant Energy to sell all these shares at a good price. Or interest rates could rise, making it more expensive for them to borrow money in the future. Overall, this stock offering is a significant event for Alliant Energy. It's a chance for them to strengthen their financial position and invest in their future. But it also comes with risks, and it will be important to see how well they execute their plans. Alright, that's our breakdown of Alliant Energy's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.